All right, good morning, folks. Today's Friday, 11:15, and we have another Power E mini group training. So, welcome, and we decided to start a little bit earlier today. So, I'm going to let Jeffrey go ahead and take it away. Good morning, Jeffrey.
Hey, Bill, how's it going?
Good, good. We're all set here.
All right, great. Uh, Today, folks, we're going to do another view of the new Power Target algo. It's called the Power Target System Momentum Breakout algo. Basically, it's what we currently have running on the M1 channel now. It's been in like a beta mode for about 3 months or longer now, performing really well. And very soon we're going to be uh, turning that same exact algo on for all the symbols, and that's going to be running under the M channels. Now, the M channels currently have a momentum breakout system that's similar, but it's a little bit different. It waits 20 minutes into the session before it gets started, and it's got a little bit of a different rule set. The objective is the same. But the new algo that's going to be turned on here, and we're looking probably, uh, I'm shooting for maybe midweek this week to turn it on. If not, it'll be definitely by next weekend. But it's gradually going to get implemented, and we'll put alerts and notes in the systems software notes section so that you realize it's turned on. It's the new thing, right? But what we're going to do today is we're going to do a little preemptive training. Right, so you can get your head around it. And again, we're going to have this running for all the symbols, not just the ES, which is on the M1. We're going to have it for the NQ, the YM, the CL, and the 6E. So it'll be kind of exciting. Basically, what we've done with these upgrades, folks, is we enhanced greatly our scalper mode, which we've done several trainings on now. And that's all implemented and running, and it's been doing great. And the momentum breakout, this new algo, is basically a super enhanced version of that algo. In the time we've been running the regular momentum algo for 2 years now, probably, I've gone back to the drawing board and done a lot of testing, and we've been observing how it's been functioning and trading off of it. And so over that time, we have been able to enhance the algo quite a bit, refine it, a lot more precise. And I'm going to be talking about some of the new advantages of the new version here as we go. Let's go to the next slide there, Bill.
Okay.
Now, as I mentioned, the new Power Target Momentum system, the new algo, will be running under the M channels. And when it gets turned on, let's just assume that we've got it running, and we're going to go through all the rules and everything today and how to trade off of it. But when it gets turned on, all you'll do is you'll click on the settings button, and you'll see the second column there, the momentum breakout. That is the momentum system. That's the new power target system is going to be running under that list of checkboxes. So again, pick the symbol that you want to work with and then check the box. As I always mention, I wouldn't have all the boxes checked because you cannot trade all the symbols with all the systems at the same time. Don't do that. Pick one. Folks have mentioned that they want to be, do scalping plus this. So pick a symbol that you're going to run this momentum system under, and then pick a different symbol that you're going to scalp off of. Now, the other thing that you could do is you could trade this momentum system on the micros, and then you do your scalping on the regular size contract. You could do um, that way. If you only wanted to do the ES, you could trade them both that way, right? One with the micro, and you're going to want to start off with the micro anyways with this momentum breakout system, which I'll talk more about. But anyway, you have complete control over which page tabs you turn on and off. And so pick the ones you're going to work with, turn everything else off. You're going to want to do that because otherwise this thing gets very memory hoggish on your end. Okay, the bandwidth increases because the system is having to receive signals for everything real time. So in other words, by picking the page tabs that you want to work with, the symbols you want to work with, you're going to cut down on the memory usage on your computer too. You don't want to have your charts all slow down and whatnot. Anyway, there you go. All right, so let's go to the next slide.
Okay.
So a good thing to do right now is review what is the difference between the power scalper, the new micro scalper, and the new power target momentum breakout system. On this system, on the software, the alert software and the on-chart indicators. And the way I've designed these two are to take advantages of the two basic ways to trade the intraday futures market. One is to go for quick impulse moves where you capture the gains, right? Lock those in. You can change direction. You can counter trend trade. You can do, fancy footwork, right? You're going for the quick higher probability moves. And sometimes you can be done with your trading. If you're going for a couple wins, you can be done with your trading in the first hour of the day. Boom, you're done. This example here shows the ES. So typical would be maybe, 1 to 5 point scalps on the ES. And you can also catch bigger impulse moves that run out to 10 points, right? The only difference between a big position trade, intraday trade, and a scalp is just how long you hold the entry. You can catch a good scalp entry that turns into a big runner, right? But with the power scalper, we're looking for small moves that we can capture. Out, on the other hand, is not a trade by trade system. Think of it as a session by session system. It's trying to make a move, set up a position on the session itself. Okay, it's not hunting trade by trade. It's looking for how do I play the session off the open. It is very important to understand the difference. And the concept with the momentum breakout is that a person can come in. We typically try to plant the seeds in the market early. You can see, usually we get some kind of alert within 20 minutes or so, and we're in a position. And the idea is that we want to plant a seed and have the market just carry us along throughout the session and not worry about too much. We don't want to play fancy footwork. We're not trying to bounce off the wiggles. We don't care about the price spikes. We just want to get a position in and let it either drift with a slow, ebbing market, drift along, or ride a sucker that's a super hot market that's, flying leaps and bounds, right? It can hang on and keep you in for the bigger moves. That's the difference. And so we can sometimes see 20-point moves and out to 50-point moves on the ES, to give you an example, during the intraday session. All right. So that's the main difference. The way we've designed the alert software, right, and the corresponding on-chart ninja indicators is that you've got a specifically designed algo, state of the art. This stuff is like cutting edge stuff. for each of the two ways to play the market, right? And we believe we've built like a way better mousetrap than anything else you're going to find out there. It's all automated, and you're able to just follow along with like a systematic approach. Okay, let's go to the next slide there, Bill.
Okay.
Let's review the uh, basic components of the easy power target system. I threw that in there because you want to think of this as the easy on your nerves system, right? You're not trying to play fancy footwork with the market. You're just following the alerts on the software and playing the numbers, right? You can get this down very mechanical. You don't even sweat it, right? There's any, nothing. You just follow the numbers. As a matter of fact, you could trade this system without even looking at a chart, right? You can have your price ladder up, the trading DOM, and just trade the numbers. Okay, works the same. You wouldn't even need to look at a chart. Okay, now I recommend you do so you have points of reference and you can kind of check in and easily see what's going on. But all right, so the basic components. This new version of the algo uh, computes off of a 5-minute opening range. The currently running momentum breakout algo uses a 20-minute morning range. Okay. Now, so what I've done is I've shortened that time frame down so we basically can get a little bit earlier entry. All right, because I fine-tuned how the algo is able to pick the direction. And so that means we can attempt to get in a little bit earlier because the longer you wait, the longer the more you could miss a potentially explosive. We've all seen it where the market takes off really strong right off the open, and literally within 20 minutes, it's already made the whole move of the day. Those are those parabolic, you know, pump and dump days that take off real quick. We haven't seen one of those days for a while, but they can start occurring, and pretty much, if you wait 20 minutes, the whole thing's already over. So the new algo uses a 5-minute opening range. You're going to get trade price barrier alerts. That means that, and we're going to go through each one of the states so you can see how the algo thinks and operates, and then you're going to play off of that. Okay, so you're going to get the trade barrier alerts, and those are the price levels where we want to watch to take an entry, and that's where we're going to be using a different time frame. You're going to use a time frame on one of your charts to actually take the entry. You get dynamic price targets, and what that means by dynamic is the algo is able for each session to compute out our best distances for the targets, and you'll get those in succession. And then there's a initial protective stop that goes in right away where you're going to put your hard stop, and then there's going to be a trailing stop that works as the session goes. And then there's also going to be parabolic stops. And what those are, we haven't had that running on the M1 channel, but that is developed. And what that's going to do is, if let's say that you're in a multi-contract position in this momentum breakout, power target system, and you're, just following the trailing stop. Maybe you've already taken something off at one of the targets, and then all of a sudden we get a parabolic stop alert, and it would give you a level. That is where you might want to consider locking in the profits on another one of the contracts, right? Because what the system is doing is going to be detecting super parabolic price movement that statistically is unsustainable, right? Which means price is going to come back off that move. So you might as well grab some profits, right? You have a higher probability of that happening. And also, parabolic stops can kick in and then they can trail a ways too. So when that gets implemented, that's going to be a really cool new additional part. All right, Bill, let's go to the next slide.
Okay.
All right, let's break down the basics of how this algo thinks and works, and then get an idea how we're going to play off of it, step by step. So I mentioned that the system uses the first 5 minute range. All that means is we let 5 minutes of time elapse, and whatever the highest price that the price made and the lowest price that the price made in that 5 minute range, that's our opening 5 minute range. Now the algo doesn't use a time frame. It doesn't use like a 5 minute chart or anything. It just measures the distance. The algo actually runs off of pure tick data and volume data. It's like a hybrid, and is able to do all these computations to, you know, figure out the range, pick our targets, know where the stop is supposed to be trailed. All right, very state of the art stuff on the back end, but you don't have to worry about that because you're just going to play off the numbers. Now, the reason that uh, again, one of the reasons I moved it down to 5 minutes is so that we can get an earlier jump on what the market's going to do, and we did improve like the direction, morning directional stuff. Alert, we've got a higher frequency that it's correct. Okay, and the other secondary purpose for the 5 minute range is to give you folks a reference point, right? Uh, there's nothing worse than having some kind of signal system, and you just wait around, and you're waiting for the thing to just turn on and ping and tell you, give you the trade, and it could be hour after hour, and you don't know what's going on. This gives you a visual reference point, so uh, how the market's behaving based on our model, right? And so you're going to have that 5 minute range, and that's going to be in the alert software. I'll show you in a minute. And if you're not using Ninja, if you're using any other platform, you just plot two horizontal lines at those. You plot two horizontal lines at those price levels, and that is your visual reference point of what's happening. Okay. Now the software, as price moves towards and touches, the higher the range or the lower range, it's going to give you visual alerts in the software, up arrow, up dot. You'll hear like, look at the software and you'll see, oh, price is starting to move to the top. And now we don't key off this 5 minute range at all. That's more of a reference point for you, but we do enforce that we can't take an entry unless we're outside the 5 minute range. So it acts as a basic filter. All right. That means if price opens up in a session and just wiggles around within the 5 minute range all day, there will be no trade alerts, right, until price can get out. Okay, so that's an excellent visual reference point, a real basic visual reference point on how the market's behaving and which direction it's trying to go and which direction we're trying to play, right? Software is going to tell you all that, but that's your visual reference point on your chart. Okay, let's go to the next slide.
Okay.
Now, the basic trigger for you folks following the system at home is a 1 minute bar chart close past whatever the trade price barrier is, the alert price. And so that means that you will need one chart, and it could just be a plain old basic 1 minute chart. You don't have to put anything on it. No indicators, no moving averages, nothing. You're just gonna have a 1 minute bar chart, open, low, high, close type of thing, and then a horizontal plotted line. Now, if you're using one of the Ninja 7 or Ninja 8 companion indicators that we built, then this is all done automatically for you, right? You've got the range and the trade price barrier, but on your 1 minute chart, you're going to basically have your 5 minute range, those two horizontal lines, and then you're going to have a trigger line. You can make that a nice little fat green line, and you're just looking for that 1 minute close. And when you get that 1 minute close, you pull the trigger. You can take a market order. All right, don't mess around. Just place a market order, and then I'm going to be telling you how you want to set the stops and everything. You'll have a stop loss, and then you'll have uh, a first target at that point. All right, let's go to the next slide.
Okay.
Each one of the states that you would see the software in, and explain how the algo is working at that point and how we want to trade off of it. Okay. This all breaks down into very basic stuff for you to follow at home, and that's the way I designed it. That's why I kind of jokingly referred to it as the EZ system, but it really is. If you follow this system correctly, you don't have to think about the market. You don't have to second guess it. You don't have to worry about indicators, also. You just follow the numbers. And again, we have that 5 minute opening range, which is your visual reference point that gives you an idea, like real basic idea what's going on. We're either going to be in one of the three quadrants: inside the range, above the range, or below the range, right? So it breaks it down into nice little compartments for you. Okay, so the very first state is that at the 5 minute mark, the algo will turn on. You'll see the software turn on, like the light switch will go on, and the momentum meter will go on, and uh, the average volume and all that kind of jazz. And then you'll see the opening 5 minute range high and range low, right? And so then you can just put those levels on that 1 minute bar chart. Okay, let's go to the next slide.
Okay.
Now, state two is when we get a proximity alert. Okay, so when you see the trend direction arrow point up and there's a green dot, and you'll hear a ping that gets you to look at the alert software. You'll see that, hey, price is touching the top of the 5 minute barrier. Now, that's not a trading signal. That's a reference alert for you. You're you're getting an alert saying, hey, price is trying to get outside of the 5 minute range now. Get ready for a potential long, coming soon, right? Could be a minute, could be 5 minutes, could be 10 minutes, but it's now at least the market's picking a direction and attempting to make a move. All right, let's do the next slide.
Okay.
Now, here's the trick part where so far everything's fairly basic, but here's the trick part. This is where the algo comes into play. Remember, I said we're running off of tick data and volume data. I got kind of a hybrid thing going on in the background. But once price is able to get outside of the 5 minute range, either to the upside or to the downside, then the algo starts to do measurements and equations, and look at uh, resistance levels, and all kind of that. Basically internal market profile is what it's doing, and it's able to measure and determine where is going to be the most precise breakout point to where price is going to start to move and we want to get in. Okay, that's so what we're trying to do is, once we get outside the 5 minute range, one direction or the other, then we really want to fine tune where's the best place to get in, because we don't want to just jump in, because there can be a lot of false moves trying to wiggle past the 5 minute range. Okay. That's a losing strategy just to jump in on that. This is where the fine tuning of the algo comes in. So at some point, and it all depends on the energy in the markets and how the market profile, and this is kind of my own hybrid market profile that I've designed over the years. It's not really to be confused with like the other traditional market profile you see on uh, YouTube videos or anything like that. But uh, the algo is going to determine a trade price barrier. Okay, and that's going to be the alert that comes through. You'll see down at the bottom there in the software, if we're breaking out to the upside and we get a long alert, you're going to have a green alert come in, and that beeps, that talks, and that gives you the level. Okay, there's a voice audio, so you have that audio alert to tell you that. Now, let's go ahead to the next slide there, Bill.
Okay.
So once we get our trade price barrier, and I mentioned that it could be 1-2 minutes after we break out, it could be 20 minutes after we break out of the 5-minute range. It all depends on the energy in the markets. But once we get the trade price barrier, then that is a locked in the sand level, right? If that level gets, if price is able to get past that level, then we take a position. So the quanted out trigger that's very easy for you folks to use is just a 1-minute close past the barrier. Okay, sometimes we'll get a close like 1 tick past the barrier, and sometimes it can be a point past the barrier. Don't fret it, just take your market order, get in. Okay, the initial stop typically goes, the very first stop, you'll typically see it on the opposite side of the 5-minute range, because basically what we're trying to do is we're trying to pick a direction for the session based on that first 5-minute range. That's kind of the balance point for the market. And so when it's able to break to the upside, then we want to stay out of harm's way to begin with. So we'll just stay on the opposite side of that 5-minute range. Okay. Eventually that turns into a trailing stop. And so at the point that we actually get the 1-minute close past the trade price barrier, right? The algo then counts that as that's a live trade, and it turns on your first target, and it turns on where the trailing stop should be. Okay, so you can just, you're going to be watching your chart. It's not a split second, entry type of thing where you have to worry about the exact tick where you get in. Uh, you you'll be able to see that. Um, you'll be able to see the dynamic target and trailing stop kick in, and you'll hear that, and so that can be your confirmation too. But again, you can just be looking at your 1-minute chart and take the entry on your own. You just pull the trigger, and then you're going to set your target and your stop. All right, let's go to the next slide.
Okay.
Now, another component of the algo is that it's able to generate dynamic targets for the session. And if you've been following the ES on the M1 channel, you see how accurate these targets can be. Today, for instance, we did have a stop out today early on, but the market turned and we got a new alert to the upside, and literally the target was 31.15.25, and that's exactly where price hit and turned back, right? And price is stalled out now, but we hit that first target on a dime. So the algos specializes in being able to pick these high frequency. Now, what you're going to typically see in a trending market is a stair-stepping type of an approach where we'll have a target generated, we hit it, and then algo will then, based on the strength in the market, will go ahead and generate the next target out. Okay, and that's going to come through the alert software. Okay, so we can, in a typically, hot, strongly trending session, we can generate and hit all three targets. In a super mega hot market, right, where we're seeing maybe the Dow melts down 400 points in a day, we could generate out as far as 4 or 5 targets. But typically, after we hit the first 3 targets, if you're still holding, you can just hold with the trailing stop at that point. Okay, you may see a parabolic stop kick in, like I mentioned, and then you could say, hey, I'm going to take my final profits there. Okay, so keep in your mind that we're basically playing a simple kind of a grid off of each session. We're using that 5-minute opening range. That's going to clue us in on the direction. Then once the market picks a direction, the algo is able to generate like 3 layers target zones. Okay, let's go to the next slide.
Okay.
All right, the other part of this algo, the power target system momentum breakout algo, is that we have a system trailing stop. So it starts out as your initial protective stop, and then as price moves in our favor, it turns into a trailing stop. Now, the trick here is that we want to stay in the session as long as possible and let the position in the trade develop as the market moves. Big long range days occur, and the majority of the time, the market on a big long range day will close in the opposite end of the range, like right at the edge. Okay. So that means if we can stay in till the very final hour, and literally some of these trades we stay in, you can stay until the last final 10 minutes of the session because the market's so strong, it just keeps moving in our favor. The idea is we want to be able to stay in to ride that out. We could, early on in the session, the market could wiggle all over before it really blasts off and turns into that big long range day, right? So we don't want to get wiggled out in the process. So much more accurate in that we're working out that 5-minute opening time range, and we've had to throttle things around so that this trailing stop is like newly calibrated for this new algo. So here's the way you want to think about it. The trailing stop is in there to be able to either reduce the exposure. You'll see as price moves in our favor, the stop will tighten from the opposite side of the 5-minute range, and that's going to start reducing potential, your risk, right? If the initial stop was 6 points, the trailing stop, we might have a dull market that's moving, and eventually that trailing stop's able to cut it down to just a 2-point stop, right? Maybe that gets hit, but it lessens the risk. Then as the trade actually is moving in our favor, we want to be locking in some profits, right? But we still want to be shooting to stay into the final hour. And so this new trailing stop is designed using some of my, you actually uses 3 different types of little trailing stop algos that I've got combined that are able to move the stop, right, to be able to stay in. Now you'll notice, I mentioned we also are going to have those parabolic stops, but you'll also notice as the market moves through the session, and if we do get some decent trending, that the trailing stop will start to accelerate and tighten as we get closer to the final hour. That's a little feature built in. So this is like one of the best, most sophisticated trailing stops I've ever designed. And if you've been following the M1 channel, you've seen it in action, and you've seen how good it is, how it can keep us in. So let's go to that next slide.
Okay.
All right, so let's talk about the long range day. The long range day is anytime the market will typically make a big expansive move that ends up being 3 to 4 times the average range of, let's say, the last 2 weeks. Okay, if you averaged it all out, we end up with one big explosive day that's 3 to 4 times the range, and sometimes 3 to 5 times the volume. Okay, it's a range price range volume connection, and that can be the downside. Now, the interesting thing about the long range day is that the great majority of the time, price opens at one extreme of the long range and ends and closes at the opposite extreme. So, hence, going back to the design of this algo, the goal is that we're in the markets. We're going to be trying to take advantage of any trending movement during the day, each session, but we want to be in the market when a long range day just naturally occurs. Okay, there's no way to really predict a long range day. I mean, we can try to guess which one might explode, but in the end, a long range day can also just be come out of nowhere and be caused by a news event, right? Maybe a big negative news event causes the market to sell off, or some kind of perceived positive news causes the market to rally. Comes out of nowhere. And we take advantage of these long range days because we're just in the market. We've planted a seed, right? Trying to ride it out. And again, that's what the trailing stop is all about. If you just follow the trailing stop, it's trying to keep you in because uh, out of going to be long range days. Now, a long range day is where we can really make bank. Okay, big, and the bigger the long range day, the bigger the number of points we can score. All right, so think in your head with this system is that yes, we're going to be making small profits as we go and medium-sized profits. It's just like baseball, right? Base hit, second base, third base, home run, right? Grand slam home run. Exactly like that. We're going to take advantage of different market conditions, and some days are going to be low scoring days, and some days are going to be humongous. But again, the goal is that we've got a seed planted in the market for every session. Okay, so think long range days. Okay, let's go to the next slide.
Okay.
Okay, let's spend a minute and talk about the three basic types of market day types that we're going to see. Now, there's all kinds of variations, but these are the three types that you're going to see over and over. One is the long range day that I just talked, and where we typically, again, we see the open is at one extreme and the close is at the other, right? This is where we make bank, and this is where we can hit all three targets, four targets, and still keep going. Okay. The other kind of a day is where we get uh, trending attempts, and they can move a decent distance in our favor, but then they fizzle out. They don't turn into a long range day, but we got something. Okay. Maybe we run out and hit a target or two, but then fizzle and come back and hit the trailing stop. Maybe that has a small loss, or maybe that has a small gain. But we either ended up with some kind of a gain, or maybe around break even on one of those days, right? Those are kind of a weak trending type of a session. And then the final kind of a day are the doji bars. This is where the market cannot escape that opening 5-minute range. It tries maybe a couple times. The bar on the left there in the box, that would be where we would see maybe a breakout attempt to the upside, and that fizzles. We go back into the 5-minute range. Then there's going to be a breakout range. Okay, those days can hook us into trades that turn around and hit our stops. We can have a full stop hit, or we can, we get a trailing stop, and then maybe it cuts the loss in half, but that gets hit. There are days that just don't germinate. And then finally, the little doji bar on the right there in the box. And a doji bar, basically, you're going to see the open and the close are at the same level. Now, the market tried and it could never get off that opening level, right? That ended up being like a magnet for price throughout the whole session. So the one on the right is the most extreme, where, we might not even break out of the 5-minute range all day, right? Or there might be little blips and then it comes right back in. And it just, there's usually no trading volume. There's usually no news going on. It could be right before a holiday. It could be waiting on Fed news or something like that. So we get days like that. So these are your 3 types of days that we get. Now, think about it this way. Think from a statistical standpoint. We get a certain, and I'm going to show you that in a minute, on a statistical basis. So this system is designed about just playing every day, each session, and it's going to perform directly proportional to the day type we get. Okay, so get that in your head, that everything is proportional to the day type that the market serves up to us. The system just basically goes for the ride on the day types. Okay, again, it's not a trade by trade system, it's a session by session system. All right, now let's go to that next slide, Bill.
Okay.
Okay, with the power target momentum system, let's talk about the breakdown here then on these day types and how that plays out. So strongly trending days, this is where the 5-minute opening range ends up being at the high or the low of the long range bar of the session. And this is where we can hit, 3 and 4 targets, and the price can still keep going, right? And the trailing stop can still keep going. We had a session where I think we hit 4 targets, and then a trailing stop locked in 18 points above the trade price barrier. Okay, that gives you an example. We're going to get these types of days 20% of the time. Okay, remember there's 22 trading days in a month. So we're going to get these types of strongly trending days 20% of the time. Then 50% of the time, we're going to get a weak trend day. This is where the market picks a direction and we hit, 1 or 2 targets, maybe get close to the 3rd target. Maybe we got the trailing stop gets us a little bit, but the day never ignites into a big long range day, but it's still profitable, right? Then 30% of the time, we're going to get trend failure days. This is where we get completely mixed results. Today is a good day of a trend failure day. In today's M1 channel, the ES, with this new algo running, we had a short position in play, and that turned into a full stop out. We haven't had a full stop out for like a week and a half, probably. And today is a trend failure day, mixed results, Friday. So then the market turned around and we got an alert to the upside, and the system went into a long position. We hit the first target, right? So we took a full stop, but then we made some up, and the position is still in play, right? We've got several more hours. Maybe, if the market decided to blast off into the close, we're in a long position today. Okay, so this is the breakdown. Now, based on the rules and the calibrations of this algo, this is a mechanical profitable system over the series. If you just follow the numbers and play the rules, then this equates out into we've got a built-in edge. If you see 20% of the time we can catch and stay in a big long range day, and this is where we make bank. 50% of the time we can have days that either show a small profit, medium profit, or uh, somewhere around break even. Do we experience days that are duds, okay, where you might end up with a loss. All right, let's go to the next slide, Bill.
Okay.
Okay, so here's a real important concept in trading that I talk about all the time. This is important if you're a scalper, whatever kind of strategy you're using, and especially like with this system also. You want to start off extremely light. As a matter of fact, I'm going to recommend that everybody just start off following this momentum system with one contract of the micro. And I'm going to give you a little plan here in a minute to be able to, build size. But the real important concept is that you start light, and as the system performs and you're profitable, you increase size. And you can continue to do that until you are trading big sizes, right? But you've done it in a very gradual, stable manner. And so there's not going to be any big price shocks to your account, right? You're not all starry-eyed and gung-ho and go in there right away and throwing big actions at the system and then taking huge stop outs, because you hit you started on the lousiest days of the month or something, right? So you got to start off extremely light. So super important concept, start off light, and as the system goes forward and is profitable at regimented time frames, you can go ahead and increase your position size. So let's talk about that. Let's go to that next slide.
Okay.
Now, if you want a totally mechanical, easy on your nerves system to follow in the futures market that can eventually show great profitability as you build size, but up front, you don't want any headaches and you don't want to incur that much risk and you don't want to have to worry about anything. You start off with one contract of the micro, okay? Trust me, if you follow this, your size will build plenty quick, right? But do yourself a favor and start off super light. So your first, here's a plan for you. It's a real simple plan. Month one, your first 2 weeks, you'd go in, everything is mechanical. You take the entry, you place your exit on that one contract at the first target, and you place your stop at the wide stop. And then if there's a trailing stop move, you follow trailing stop move. One of two things going to happen. You're going to hit the target or you're going to hit the, stop at some point, right? The full stop or the trailing stop. All right. So real simple, easy on your nerves, very low risk. What you're going to notice is we have a high frequency of hitting that first target every day, right? Even if we have a market that kind of fizzles out and it's a weak day, we can many times hit that first target. So you're going to be looking for a higher number of wins than your losses, and you just follow that for 2 weeks. You can then plot, track that in a spreadsheet, and it's basically one entry a day. Track the results. If you show a profit, if you have a higher win ratio, your third and fourth week, you go to 2 contracts of the micro. Now, at that point, you have just padded your account with some risk capital that you earned on the first 2 weeks, right? So you go in and go to 2 contracts. Now you take the entries. Your first contract gets taken out the first target, and then you can set the second contract for the second target. And again, just follow the trailing stop. You do that for 2 weeks. Month two, your first 2 weeks, you go to 3 contracts, right? You're building, you're pulling yourself up by your own bootstraps, and you're building off of capital, risk capital that's padded into your account off of the previous gains. So you have no risk just adding a new contract at that point. So now, because we generally get up to 3 targets, you go for the 3 targets, right? 1 micro off at the first target, 1 micro off at the second target, another micro off at the third target. And if we don't hit the third target, then you get taken out with the trailing stop at some point. And then finally, we get to the 4 contract level, which is kind of the balance point. And you are shooting, if you're going to catch a long range day, basically 1 contract off at the first target, 1 off at the second target, 1 off the third target, and the 4th contract stays in as a runner into the close. There's some variations on the theme, right? Let's say that you're at the 2 contract level, and the previous day you maybe took a hit or something, and it seems like it's a weak day. You have the option to pull 2 off at the first target if you want. Or let's say that you're at the 3 contract level and the conditions don't seem all that energetic. You can take 2 contracts off the first target and hold the 3rd contract for the second target. You see, so you got little variations in there that you can do to kind of adapt to what you think the market conditions are. All right. In the end, it all kind of averages out anyway, but that's how that works. Eventually, as you get to 10 of the micro contracts, that turns into 1 of the regular size contracts. Okay. And eventually you want to move up to the regular size contracts because you have a little bit more efficient commission rate. Okay. Over the series, you'll pay less commissions trading the regular size contract. So you never want to get to 50 of the micro. It doesn't make any sense. Use the micro as your getting started stepping stone to graduate you. It's your training wheels. It's going to graduate you into the regular size contract. So I highly recommend everybody starting off, start out with a micro, follow this plan. In no time, in a few months, you'll be raising your size. And then it's just a matter of duplication, right? 4 contracts can then turn into, 8 contracts. Okay, let's go to the next slide.
Okay.
Now, this is a slide I like to put up because I want you to understand the nature of the markets, price movement, and trading around the markets. It's very difficult to be a quota trader where you say, oh, I want to make exactly this much per day, and that's my plan. And that's a hard thing to achieve. And if you go for a target, let's say you tried to make $100 a day or something like that, uh, and you are pretty good at hitting your targets, you're still going to be shortchanging yourself because there's going to be days where you could have made 5 times that, right? And because you're just stopping at the concept here is that we're letting the market behavior and the energy in the price movement to dictate our profits. We're trying to stay in each session and ride out as much as possible. And lo and behold, just statistically, we get big long range days and we get big price moves in our favor because we can have news hit. The coolest setup ever is where we can get into like a trending market, and then that day, by coincidence, we also get a news event that propels the market even stronger, like it's a 1-2 punch, and we're in, and the market's running in our favor. So this again, following this kind of system, each session will pretty much guarantee you'll be in for the ride on those days. And so the concept to get is that we can make money on some days and we can lose a little bit of money on other days, and you know again, show a little profit on another day, maybe break even on another day, but we can also catch the big grand slam home runs, and that is where the profit kind of rolls in. So don't fret if you, like, let's say, start following in, you're kind of still at break even. Okay, you're probably not going to see that, but let's say you did. Don't fret, because that's just fine. That just means we've had super dull market conditions, and or maybe by luck of the draw, we had some erratic conditions that knocked us out. But the point is think of, we're trying to tread water, trade, with a slight profit or around break even, and but then also be in the market to catch the big ginormous moves. That's what this system is designed to do. It's designed to do it in a real basic, easy for you to follow at home way, and easy on your nerves. And I showed you, starting off with the micros, just one little micro. You can't get scared of following the system. Just follow it until after 2 weeks, analyze your results. And if you have a profit and you show more gains and wins, you go to level two contracts. Okay, let's go to the next slide there, Bill.
Okay.
So the final thing I want to stress about this new algo is that it's a completely mechanical system. You don't have to second guess it. You don't have to analyze it. You don't have to look at uh, any moving averages or any indicators. Um, I mean, you're welcome to, but you don't have to worry about that stuff and try to figure out what's going on. The algo is already designed to be able to play each of the market day types as best as possible, right? It's able to adapt and recognize what kind of day type we're in and what's going on. And so the way you want to approach it is, your goal is you want to make points and you want to make profit. If this is a system that'll do it and you don't have to think about it and you don't have to worry about it, you got the best of both worlds, right? And so your goal is to follow the system mechanically and not try to, outguess it. All right. So you want to fly this like, you want to follow this system like flying by instrument panel. Follow the numbers, trade the rules. That's it. Okay. And I'll give you a couple examples. We've had plenty of examples where price has come down all the way, a big wide stop, let's say 6 points or whatever, and prices come all the way back against us within a tick or two of the stop, then turned around and over back up, and then blasted off and turned into a big trending day, several targets hit. Now, if you had been there with your indicators and oscillators and other moving averages and trying to second guess what was going on, you might have said, "Oh, I can see price. It's going right towards the stop. I got to get out, protect, a few points, whatever." You made that decision. You basically altered the logic of the system. So the system is already designed to be smarter than you, smarter than me. This is all quanted out, right? Let the algo, let the advanced logic in the algo just dictate your moves, right? And again, that's why if you start off with the micros, it's so easy on your nerves, and it's easy to ramp up quickly over a couple months and be playing bigger sizes. And by then you'll have complete trust in the system. Okay. This system has performed extremely well since we launched it. Just to give you an example, this week, Monday, 2 targets were hit. Tuesday, 3 targets were hit. Wednesday, I think 2 targets were hit. Yesterday, I think we had a target hit, and then it kind of fizzled. And then today we had a one stop and a target hit. So the great majority of the time, we've been just hitting, targets this week. So fly this system like, by an instrument panel and play the numbers. And again, this is totally, you can follow this system totally just by playing the numbers, and you could be working in your office all day concentrating on other things, right? There'll be times where we'll be in a position and it's a slow market. Maybe the position moves in our favor a little bit and the trailing stop is moving a little bit, but nothing's really happening. And we could be in that for 2 hours like that. And you might be going, wow, nothing's going on today. And all of a sudden the market blasts off in our favor. We start hitting targets, right? You don't need to second guess it. It's all quanted out to work over the series. Okay. So that's it. That's our presentation for today. This was a pretty good overview of what's coming and how you want to follow it. And Bill, do we got any questions from folks?
No, actually, we don't have any questions because today you didn't put the question form on the show page. But so I thought maybe we just take a couple of minutes and.
Oh, well, do you have any questions?
Well, no, I wanted to maybe just reiterate a couple of important points. As someone who follows this system every single day on the charts, there's a couple of things that I've noticed and a couple of really important points. One, I think that everybody needs to realize is that you don't want to try and pick and choose which days you trade this, right? This is designed to be a very sort of regimented, systematic numbers game, like you say, because we know we're going to get long range days in the market. It's inevitable, and it's kind of tough when you think the market is going to be dull, or you think, well, today's, this is going to happen or that's going to happen. I mean, don't you think it's like extremely important that it's followed every single day?
Yes, I do. The Right, because we can't predict what the market's going to do. We can only play it. And even a day that looks, you can study different time frames and all your technicals. Even a day that looks like it's just going to suck and not do anything can blast out of nowhere based on a news event,
Yeah, so
right?
that's, yeah.
Yeah. So the point is, and that could turn into one of your big day, your profit days that goes into the stats, right? And so you miss that because you were trying to figure out, you were thinking the market wasn't going to do anything, then you're just not in the game. So just follow the system every day. Now, the point is how much. So, for instance, today um, we had a full stop out, but then we turned around and uh, got into a long position and hit a first target. We're still in. Trailing stop is moving, and we could run much further today based on whatever, right? Uh, and so the point is that's going to help make up. So not taking that second trade today because you got gun shy off the first one meant that you would have locked in your entire loss on that first stop out, right?
Yeah.
But the second trade here is helping make it up, and that'll work over the series. That the system naturally tries to self correct and make up little losses here and there. And even when we have terrible, we've had early on we had 2 days where I think we had 2 sessions in a row where we just had stop out after stop out after stop out, really erratic, dull days. But then the system over the next couple of days made it all up. And so you can't pick and choose, just you want to regiment following the system every day. We're only going to see up to potentially 3 alerts per session. And
Yeah, I've only actually seen two.
Yeah, I mean, we could see three. It's possible, and I'll tell you why. Let's say that we had a really shallow, breakdown of the market, and then a really shallow breakout of the market. Real shallow off that 5 minute range. So we're not even moving that much. But then in a short time, we have a big third move. Right?
Gotcha.
That's
Yeah.
possible. Uh, but typically, keep in your mind that we're trying to play the session, and the entries typically come early on in the session. We're looking to be in something within the first hour.
Yeah, I'll tell you something else interesting that I mean, I've seen all these different types of day sessions play out along with how the alerts play out and the targets and all that. I'll tell you there was a really interesting one recently where the market surged out of the gate, hit all three targets, and then basically that was it, and it turned around and fizzled. But one of the things I've noticed is that on the really good days, the market tends to hit all three targets relatively quickly. And, I even sent you a comment and I said, hey, this is the perfect day. All three targets done by lunch. And then there's other days like today where the market's basically just hovering around the first target here, right? And
Right.
so some days, and then the idea is that the holding into the close thing. Now that's kind of infrequent, but I have seen that too, where the trailing stop continues to move. The market keeps going in one direction, and it never gets hit. The trailing stop never gets hit throughout the whole session, and that's kind of a rare thing. But you
It's
see.
rare, but we just haven't had any really big long range days since I mean, we have, but the frequency's been a little bit lower than normal.
Yeah.
Normally, we get, we can see this hold into the close a lot more, and we could have like 3 days in a row where we hold into the close, but we just haven't had those kind of market conditions
Sure, and
recently.
that's kind of an important thing is because the system is designed to work off of what the market gives us, and so the whole thing. I know you go over these day types a lot and the different types of the long range days and that type of thing, and that's like such an important concept because we can only play what the market gives us, right? And so, on the days where, you have a narrow range day or there's no real traction. There was actually a day, I believe it was last week, where there was no alert issued. And what had happened was the price, it kind of tried to escape a little bit out of the range at first, but there was no alert given, and then it fell back into the range, and I was watching it and I kept thinking to myself, okay, we're stuck in that 5 minute range, and that's kind of why it's important to actually have the range on your chart. Why it's fun to kind of play along, because at least that way you realize that, okay, there's no alert because the price is trapped back in the opening 5 minute range there. So and so literally there was no alert given all day because the market was kind of just chopping around sideways, in a range.
Yeah,
Really dull,
exactly.
low volume,
Right,
dull.
and that's part of it that we're using the dynamic trigger range, which I designed, and it's got special calibrations just for this algo, and that helps determine where these breakout points are. And so, yeah, a super dull market can keep us out of even taking a position, right?
Hmm.
So now, one of the things I was going to mention, one of the great advantages to trading this, uh, new power target momentum breakout system is that, if you're one of these traders that have just, you know, not been able to make futures trading work, right? You get in, you learn like a setup, and it works great on sim. And once you get in there live, you like strike out, over and over. And it's totally possible to do that. I mean, it's, not a 50, it doesn't have to be a 50-50 win or lose. You could lose 5 times in a row on some of these setups that people play. It all depends on the market energy. The problem with setups is, and when you see in the advertisements and the textbooks these setups, those are the ones that worked on a really good day where the market lined up with that particular type of setup, right? And so, yeah, you can look at a chart on that day on this whatever setup you're playing and go, wow, one winner, two winner, three winner, four in a row, wow. But then on a crappy day that doesn't line up with that setup and is extra erratic, you have five stop outs in a row, right? That's the problem with individual setups. So when we have a algo like this, uh, you're going to see that you're not trying to always maintain that, high win ratio, because we're just going to be in the market when the market moves, and the market can, even on erratic days that would have stopped out all your newfangled trading setups, would have stopped all those out. You can be in just riding the current that eventually swells and takes off big in your favor. And so if you've had trouble being able to maintain a profit edge on your trading and you know positive point gains, if you've had a problem and you've had a problem trying to stay in the market, a lot of people, this is it. This is the system for you, because um, you're going to notice that you'll just be in these ginormous moves and you'll see point gains like you've never seen before. Why? Because you're just following the numbers and you're just doing what the system's telling you to do. You're not trying to think about what you should do to play the market. And so that's a real important concept. And following this and doing it and starting off small with the micros, you're going to be able to experience these big uh, point gains, and then you'll turn into a believer and have confidence in following the system.
Yeah, absolutely. So, yeah, this is sort of, this is an interesting improvement is what I guess I'll call it, like a huge improvement on sort of the original momentum system concept where we were looking to trade just, sort of on the break out of the range on a directional move. This is so much improved because now the back end algo is actually calculating the entry price for you. I mean, obviously, we're waiting for the price to escape the range, but then it's pinpointing right at the optimum sort of level. And one of the things I've seen a few times is that, say, the price breaks out of the top of the range and kind of pokes up and then starts to fade back a little bit and maybe hem haws around or whatever, and then the entry point there, I've seen many times where the price just like literally keeps ticking right around the entry point, and you don't get that 1 minute close over it for sometimes like 5 minutes, 8 minutes, or whatever. And so, it seems like it's like really super precise. And so, the one thing I wanted to ask you about, and I know what the answer is going to be, but I just want to reiterate this, is that you will see those 1 minute bars close like right at the exact trade price barrier. And I'm pretty sure that you're going to say, wait for a close over the barrier, right? Like say you get, 4 or 5 of these 1 minute bars that are poking above the barrier, closing at the barrier, closing a couple of ticks below it, and then close right at the barrier. You still want to wait for that close above it, and that's like the confirmation, right?
And that's exactly what it says in the alert software. Basic entry confirmation is a 1 minute close past the trade price barrier, trade alert barrier, and don't sweat it. I mean, some of the like I mentioned, some of the closes will be a tick or two past the barrier, and some might be a pointer or two past the barrier. Just take the entry, because we're just we're playing the big macro market profile for the session, not worrying about little one.
Yeah, it makes total sense.
And by the way, that confirmation then makes it super easy. There's not any big fancy rule set of like, in this instance you take this entry and then that, not like that. You just get the 1 minute close past the barrier, you pull the trigger, you're in, set your stop, set your first target. It's mechanical.
I've seen everything literally happen, following this system now for, a couple of months. Like there was a day where the price came down to the trailing stop, literally to the tick hit the trailing stop and then turned right back around. But I mean that's just sort of the nature of everything, and that's why it's important to stick to it, not sweat it, and take it sort of day by day. And at the end of the week, I've been keeping track of this, and I mean at the end of the week, it's penciling out, and so you can't stress out, you can't fret about one session. The more that you approach it like mechanically and systematically and think about it, over like a week's period, a couple of weeks, a month. And so I really like your starting off small progression, because I'm super confident that if somebody actually, and especially like target one is super high frequency target. I mean, target one almost, gets hit the majority of the time. It's typically like a real easy target, right? And so I'm going to guess that these targets are calibrated based on sort of the behavior of the market at the time.
Yeah, exactly. The whole one of the things we're doing is we're looking at the previous like 30 minutes of pre-market price action, and then we're waiting for the first 5 minutes, and then we're kind of analyzing all that, and that's how we're able to pick uh, the breakout levels, and we're able to start generating the targets. And then based on the actual behavior, price behavior, the trailing stop is very sophisticated. It knows when to move and lock stuff in. So for instance, today, to give you an example, uh, when we turned around and we got that long entry on the ES, the very first target was 1525, 31, 1525, and we hit that, and we've been uh, clanging around that level now since we started doing this presentation, which meant that that was the exact level where the market hit resistance, but we took the first exit there. And then the trailing stop now is pulled up to uh, to 31.1250, which is tightened things down, and that is like right around the entry, even on the second part. You see?
Yeah.
So in other words, we caught that first target, and then you're basically protected now on the remainder of the position.
I've noticed a lot of
And
times by the time you get to around target two, and I mean everything depends on what's happening with the current market structure, but typically by the time you get to around target two, the trailing stop is above the entry or really close to it. And of course, everything depends on sort of the volatility of the market, because if you go back, like you go back a month or whatever, I think it was around the end of October or whatever, maybe a few weeks. There were days where the targets were like 6 points, 8 points, huge targets, and then you get these days where there's not a whole lot of, I guess, range or whatever, and sometimes the target's only a few points. And so I've noticed that everything's sort of calibrated to the current behavior of the market.
exactly, and that's again the uh, the big sophistication to this algo is the timing of our entry, so that we don't get in on false wiggles and false breakouts. That we're trying to get in the most precise time, and then that our targeting is so accurate, and also that trailing stop is so uh, so we don't get wiggled out of a position that can turn into a big winner. And so those three things combined on a basic concept, and this is a winner.
Hey, well, I appreciate you bringing this presentation to us. Let's go ahead and wrap this up now, and we'll get this edited down and put up in the knowledge base. And so everybody have a good
Yeah,
weekend.
you, you know what? Let me just make one more comment
Okay.
that I was going to mention, and then we can wrap it up. Uh, what I recommend everybody do, if you are just if you're seeing like this for the first time and you're excited about this system and you want to get started with it, I recommend you spend your first 2 weeks on sim. Okay, remember the chart I showed you? Like, I had showed little 2 week increments. Spend your first 2 weeks on sim, and then before you get started with the micro, uh, pad your account with risk capital. and I have a good video about that in the knowledge base that you want to watch about risk capital. Don't trade a system off your original capital. So all that means is that, if you have $2,000 in your account or $5,000 in your account, lock that down and send an extra, couple $100 or $500 in, and that is the risk capital to use to initiate a system like that. Way it never burns into any of your original capital. So, follow it on sim. That'll build your confidence and also get you through the learning curve of the rule set. It's real basic, and then begin with one micro and trade off of risk capital, and that's it, Bill.
Awesome, awesome. So yeah, we'll go ahead and make sure that everybody watches the trading off of risk capital video there in the knowledge base. And so, hey, it was a great presentation, Jeffrey. And I think that this is definitely, well, I'm certain that this is definitely a winning system. And so appreciate it. And hey, everybody have a great weekend.